Okay, so you guys got the picture. I'm not going to be doing that highlight of blocking out where it is. It's a little time consuming. And some of them are actually kind of tricky, so I got to go and do a lot of editing to cover up the actual move because some of them just take off really explosive, which is the hallmark of the ICT optimal trade entry. That's what makes it optimal. It gives you volatility. It gives you magnitude. It gives you impulsive price action. That's what you want. Okay, and that's how you know it's smart money behind it. So again, the fib doesn't do anything. It just highlights specific things that unfortunately I can't go into great detail here, but you can see by itself, it's a lot of insight alone. But for now, we're going to take a look at the gold market. I was going to do cable, and that's usually what I'm going to be doing on a day-by-day basis. Gold I just threw in today, and please don't ask me to continuously add things because I'm only going to do what I want to do, and it'll just irk me if you guys keep asking for more than I'm willing to do. Believe me, you can do the same thing in your own chart. Okay, just trust me, you're getting more than you need. So on gold, we're going to be looking at a few little things here. I just want to bring up something else. When we're looking at this chart, um, it's important to pay no attention to this as well. This is a stop run right in here, and this is an ICT bullish breaker. So this setup here, even if you didn't see the optimal trade entry long, it's still an ICT bullish breaker. Okay, so this is all higher level time frame uh, supported. But the long and short is this reaction in here is a double whammy, if you will, because it has two of my higher learning principles and concepts right at the same time. Okay, so let's strip this and go right into the nuts and bolts of what I want to show you. The price points are going to be this high on this candle here and this low. And just so you guys can see it from a conceptual standpoint, it would look like that. Okay, so as price hits this 62% trace level right there, that's all that would be necessary. You can go long on that, and your fill would probably be somewhere up here, whatever. But the long and short is, we would know these levels in advance, okay? And ultimately, this one up here, okay? This is at 200 extension at 1273.7, okay? And the reason why we'd expect to see a nice move like that is because we've seen a breaker. They've gone down, taken stops below these equal lows. A lot of retail educators, they like to see this. They call this a double bottom or triple bottom in this case. And when the market makers and the algorithm posts a rally away from that, it builds a lot of sentiment around this being significant support. And it's really not. It's in my group, we dub that as Candyland. And they come down and they take the candy from those babies, and then the market runs away. Now, watch what happens. Say you've taken first profit here, scaled something off. Maybe you've taken something off here at target one, target two, and ultimately a symmetrical price swing. But because it's a breaker, in addition to it, you know there's probably going to be a larger magnitude move. But does it get there? No, nothing. It doesn't do it here. Okay, so now what we can do is we can take the fib off. Okay, and if we have an unrealized price objective up here of 1273.7, we can do another fib on another price swing here. Okay, so we take the low up to the highest body, which is going to be, well, let me just put it right there on so you guys can see which one I'm doing. Right there. So it's the lowest close. It could be an open down here as well, guys. It's not the close that's an important factor. The highest body candle here in this price swing. So we're getting the measurement of the bulk of the volume. Okay, it's real important. That's the reason why I'm doing it now on the wicks. Now, when I do projections on targets, sometimes I will incorporate wicks, but you'll learn that in the tutorials. But for now, I'm going to keep things germane and salient to the original rules were just using the bodies of the candles. So now we have the symmetrical price swing up here, and we'll highlight that. So that takes us at 1273.8. Okay, not much of a difference, admittedly, but that is also an optimal trade entry right here at precision, right at the 79 concentration level, and price does what? Rallies away. Boom, hits it right there, and gives us a nice round number, 1274.0. Okay, really, really nice price movement there, and you would use this one because also we have an unfulfilled price range here, and we also have this break in market structure right there with this slightly higher high. So that gives us an alert for optimal trade entry again, and boom. So there it is in gold, and you've seen all the other majors in cable. I've already done that on my forum. Until next time, I wish you good luck and good trade.